Okay, so here's the deal. Strategy, the company that's basically become synonymous with corporate Bitcoin ownership, just dropped a bombshell. They're sitting on $4.75 billion in cash. Wait, hold up, why would a company famous for loading up on Bitcoin suddenly prioritize cash? That feels like Elon tweeting about loving Doge then buying Tesla shares. Let me unpack this because the implications are wild. Personally, I think this reveals a massive disconnect between crypto purists and institutional reality. Strategy's CEO Phong admitted he assumed investors would drool over Bitcoin's liquidity and appreciation. But guess what? The suits putting money into their products care more about cold hard cash. That's fascinating because it challenges the whole Bitcoin is the ultimate hedge narrative. What's going on here? Let's zoom out. Strategy isn't just hodling Bitcoin anymore, they're building a digital credit empire. Their STRC preferred shares are basically financial Frankenstein monsters blending Bitcoin exposure with stability. But here's the twist, look compares their vision to Apple's iPhone ecosystem. Wait, they want to be the platform for other companies to build financial products on top of their Bitcoin holdings? That's either genius or delusional. From my perspective, this exposes a fundamental tension in crypto. Can you really create safe crypto-linked products without killing the innovation that makes crypto special? Now here's where it gets spooky. Strategy owns 4% of all Bitcoin. 4%. Lu straight up calls them the central bank of Bitcoin. That's terrifying if you're a decentralization purist, but let's be real, it's probably true. Their moves now shape market psychology. When they buy, the price jumps. When they pivot to cash, people panic. What this really suggests is that Bitcoin's decentralized narrative has a giant loophole, whales with printing presses. But wait, the part that keeps me up at night is their legacy software business. 1,500 employees, 54% cloud growth. Why does that matter? Because Strategy is secretly a traditional tech company using Bitcoin as rocket fuel. This hybrid model could be their superpower or their Achilles heel. Think about it, they've got AI engineers and marketers maintaining their old software biz while building Bitcoin products. That's like a fossil fuel company suddenly leading the solar revolution. Will the dinosaur DNA kill their crypto credibility? Here's my hot take, Strategy's cash move isn't weakness, it's chess. They're playing 4D chess with investor psychology. By hoarding cash, they create artificial stability in their products, which lures institutional money that would otherwise flee crypto's volatility. But this raises a deeper question, are we witnessing the birth of crypto's first shadow banking system? When Bitcoin isn't enough, cash becomes the stabilizing force in a decentralized world. The irony is delicious. Let me leave you with this, Strategy's story mirrors Bitcoin's broader struggle. How do you scale a revolutionary idea without compromising its soul? Their cash cushion is a band-aid on a bullet wound. They're trying to make Bitcoin palatable to Wall Street without destroying what makes it dangerous. But at what cost? When does innovation become just another word for selling out? Drop your thoughts. Does Strategy's hybrid approach save Bitcoin or sterilize it?